Gary Wagner from thegoldforecast.com joins us to discuss the Robinhood Reddit Renegade and silver. This and more on this edition of Metal Money. I'm your host, Patrick Vieira. Gary Wagner, welcome back to Metal Money. How are you doing?
I'm doing excellent. It's great to be back with you.
Glad to have you back again, Gary. Recently on the 18th of January, we saw a golden cross. Now, this was, of course, pre Robinhood and Reddit Renegade making headlines. Were the markets, despite what we are seeing today, poised to have an uptick irregardless?
I believe so. What I think is that the cross that we saw, the golden cross, occurred not only in silver futures, but Forex or spot, as well as in America, the ETF SLV. And so on a technical basis, I believe that silver had more upside potential than gold. The fact of the matter is gold traded to an all-time record high in August of last year, $2,088. Concurrently, we had silver only trade to about 30. And I say only because the last time we had a record high in gold, we also had a record high in silver at 50. So we saw an underperformance at that moment. And so I have believed that in terms of gold and silver and the ratio, that silver was being undervalued since that point, since it didn't reach a new record high.
Okay, why do you think silver was so undervalued at that point relative to gold?
I think because when you see gold move as a primary safe haven play, it will attract a lot more investors into the market than silver will. And so there's going to be more demand for gold. However, silver can move and does move disproportionately to gold. On the upside, it tends to outperform gold, and on the downside, it tends to outperform gold in terms of the percentage gain drawdown that you see. So I think it's simply a case of it playing catch up.
And of course, all the news still is the Robinhood Reddit Renegade. Gary, how do you factor this into your technical analysis? I mean, as a trader, how do you account for these types of events?
What I think you see is as follows. When we first got word of the plays with the Reddit forum group in stocks like GameStop and AMC, American Movie Theater, they were making plays on equity markets, or actually companies that didn't really have fundamental backing behind it. The only reason I think we saw, for example, GameStop move from $40 to $450 in a single week was the short squeeze that was applied by a collective group of individual retail traders moving into that market. Silver is a different animal altogether. And so while I believe we saw an exaggerated upside move today, in silver, I think that the upside move was warranted. The differential, as I'm saying, is that the plays they were making on these certain equities had no rhyme or reason to go as high as they did. And therefore, I believe that they're way overvalued and will fall dramatically. We had a $100 drop today in GameStop. And I think we'll continue to see that. In other words, I've seen many occasions where groups of traders, whether now it's a band of retail traders, but hedge funds and large institutional plays, doing the same type of collective trading where you'd have a couple of hedge funds kind of get together as a brotherhood and go in and sell silver in between a holiday session when it was open overseas, but not in the United States. And based on that, you get these exaggerated moves. And that's what we're seeing.
Okay. And yeah, because of that exaggerated move, and now we're seeing silver starting to slow down a bit and coming off that weekend with that big open for silver. What short-term, perhaps price point would we be looking at for when we start to see perhaps that consolidation starting to come into effect?
Well, the key to me is that over the last 2 days, silver effectively traded above the record high of last year, which was approximately $30. It couldn't sustain that. It closed at about $29 and change. I believe if we see a effective close in the futures market, and this, of course, is basis March future, Forex is a little bit lower, but above that record high, meaning $30, we could truly see the beginning of a strong breakout to the upside in silver. Now, in terms of it consolidating, we would have to see it move back to 27 or 28 if we had any kind of retracement here. I personally don't think we're going to see that much weakness over this next trading week.
Okay, so short term, are you looking at silver to finally break over 30 and maintain and hold it?
That's absolutely what my technicals are telling us. So they've been telling us that for the last week and a half. And I'm referring back to the Golden Cross. I'm referring it to breaking through different Fibonacci retracement levels. Silver has been strong. It has been outperforming gold recently, and I believe it will continue to do so.
Okay, and for gold, I mean, it has been somewhat lagging. We've seen the silver to gold ratio come down into the low 60s. Uh, what's going on with gold? When will we, or what will it take to for us to see gold start to move?
Well, here's the thing, gold is moving. If you look at gold by itself and not look at the relationship of the gold silver ratio, it had a respectable gain today of about $13, respectable gain on Friday of about $8. The market has been slowly creeping up. And after hitting the low of 1750 and then coming back up to about 1960, then it fell one more time and had a higher low. We've got a series of higher lows, a series of higher highs. So it is moving to the upside. What has been holding it back recently has been dollar strength. When the dollar falls, it's obviously you can have a neutral buy to sell ratio and have the market move up just on dollar weakness. Today, though, we had the US dollar index up 0.5%, and we still saw a $13 gain in gold. Without accounting for the dollar, it was actually $22 gain. And so what you're witnessing when you're looking at that weakness in gold, when you compare it to silver, it's that silver tends to outperform gold both on the upside and downside. And when you have dollar strength and you've got so much buying momentum coming into the markets that you're still seeing positive closes in gold and silver, that's impressive. When you see silver close up 9% against a strong dollar, that's extremely impressive. And I think this is something that will continue.
Okay, something that'll continue. Last question here, back to Robinhood. You know, we saw Robinhood limit trades, and they would take trades to the downside, but they wouldn't take new positions or even trades to the upside. This just isn't normal. And from a trader's perspective, what's your thoughts on this?
Well, I think the biggest issue with Robinhood is their position of monetization, how they make money. I trade with TD Ameritrade, not to promote them or anything, but they're making their income a lot from the ask bid spread, but it wasn't totally a monetization policy about selling information about orders they're about to put in to the large hedge funds and institutions. When word got out really that that's how Robinhood was surviving and making money, that's when you saw this whole band and group get together and really rebel against Robinhood as a trading platform. And so I think that you have to be realistic. If you're trading with a broker that gives you commission-free trades, there's no free lunch. They're monetizing, whether it's your information, your data of some sort, in some way to make money. And so you have to have a realistic approach. I think that what Robinhood did when they suspended the trading of the certain stocks was an attempt. They realized they had to put more capital into the market to kind of have a very vibrant and solvent company. And that's exactly what they did. I think that they put themselves in that position, but it wasn't illogical what they did. They were fearful that the unbalance in buys and sells and keeping them unprepared to handle it would be a devastating effect. And so it's the same as when the exchanges have a circuit breaker. In the old days when we used to trade gold and silver, we had limit moves, right? There was $25 on gold. If it moved to there, it went lock limit. The reason for that is exactly what Robinhood couldn't resolve in a free moving market that has no limits as to how far it can move up or down in a single session.
Okay, that's a great explanation. Gary Wagner, we appreciate your insight and your time, and I hope we can do this again soon.
I look forward to it. And this is going to be a great year for gold and silver traders. That's my prediction.
There you go. Keep your eyes open for the short-term moves in silver and keep your head on a swivel as these moves may be far from over. As always, let us know what you think in the comments section below and keep it liquid, keep it real. I'll see you on the next episode of Metal Money.